What is the current U.S. macro setup? Our chief equity strategist and economist, John Blank, should be able to help us understand this more. He's here with me now. John, this can get a little complicated. Is this referring to current U.S. macroeconomic data?
Absolutely, Terry. We're speaking on Thursday, July the 30th, and we just got out the second quarter GDP numbers from the Bureau of Economic Analysis. And they said, well, we did 1.5% growth in the second quarter. And to give you an idea of what that amounts to, we have been doing 2% growth, 2.1% to be exact last year, 2.1% this year, and 2.1% next year. And if I look at consumer spending in this number, it was 2%. Now, what happens is the number that is really interesting in this is called real final sales to private domestic purchasers, which is the sum of consumer spending and gross private fixed investment. So that increased 3.9% in the second quarter, but only 1.7% in the first quarter. So if you average that, we did 2.3% in the first half of the year, which is exactly consistent within 0.2 of that long-term 2.1% growth number. Now, what is different here is we had a big 1.4% increase in imports. When you bring imports into the country, it's a subtraction from your economy because it's production that's done outside of it. So what happened in the second quarter, Terry, that lowered it down to 1.5 was people stockpiling imports when they heard about the supply shock or prepared for downstream effects from the supply shocks from the Strait of Hormuz. So most definitely the case that we've seen a preparation and a gyration on the part of manufacturers. Part of why the PMIs rose in the second quarter was because people were stockpiling imports, thinking that the diesel costs, the transport costs, and the actual final product costs are all going up now with the Strait of Hormuz closed. Yeah, Terry, if you look at the real final sales to private domestic purchasers number that I told you about earlier, you'll see that it's just gliding down out of the COVID period, and we're just tracking really smoothly, like a soft landing, around that 2.1% growth rate level. As I mentioned, 2.1% last year, 2.1% this year, 2.1% next year. That, Terry, is the definition of a soft landing.
So, what is all of this currently suggesting about the U.S. economy?
Uh, it tells us that it's a lot more static than people think. And I would also argue that it's probably 1% of the 2% growth is coming from the AI capex boom. So it's also probably more tepid than you might imagine. But from a Federal Reserve management perspective, maybe that's good news because they were, for years now, trying to manage a soft landing. And Powell definitely wanted to hand off a hand that was well worth playing to Warsh, and I think he did that.
So, against the backdrop of what we just spoke about, you've also written that there are three concerning parts to this macro setup. What are they?
Yeah, number one, we have AI capex being funded externally now with leases and loans and bond issuance. And that should always concern us because private credit and bond blowups, not stock market blowups, are how you take economies down. And we now have that in place. Number two, we have revolving credit numbers supporting the consumer. Consumers are done with the excess savings of the COVID period, and there are very high credit balances and a lot of credit losses out there, which should be concerning for those of us worried about that 2% consumer growth rate. And the third one, Terry, is the core PCE rate, which is the Fed's economy-wide inflation rate, is steadily rising and is going to force the Fed to have to raise rates here in September, I would guess. They didn't do it this month, but there were three people on the FOMC that did vote for a hawkish rise, which is telegraphing that they're almost certain to raise it to 25 basis points because of that third issue, which is rising price inflation over the last 4 months.
Are these three concerns in conflict with what we just talked about, or do they contribute to what we just talked about?
They muddy the waters and make for much more concern on a going forward basis in terms of the sustainability of this soft landing, because it's got a lot of excesses, it's got a lot of additional monetary restraint from the Federal Reserve, and it's got potentially a consumer pullback in play here. particularly with the oil shock that could build into the election period, we all need to be realizing that the soft landing, that I told you about, is probably not salient right now because there's a lot of turbulence going on.
So I'm assuming that everything that we've just mentioned are conclusions drawn by you from all of this. Are they concerning?
I am concerned, Terry. I think there's an underpricing of risk in this market, and there's been too much hope about the AI trade and not enough return on investment. And like I told you, everybody who was euphoric is telling me productivity gains and growth. So I'll just mention what's troubling for me because we're 4 years in on this AI thing. 2.1% growth last year, 2.1% growth this year, 2.1% growth next year. That's showing no gains in the AI trade from a demand perspective.
Has any of this caused you to change your U.S. economic outlook for the year?
Nope, I won't change it for a while, Terry. I think, macroeconomic accounts run on a quarterly basis, and there is a stubbornness to what I've told you at the top about the private consumer at 2%. And as long as the consumer hangs in there, Terry, we'll be fine. What can be concerning here is a huge wealth effect from the blow up of the stock bubble in the AI trade, taking down the high end consumer now. And that would be the beginning of the end for this growth story.
Next, three more Zacks number one strong buy large cap stocks that you're watching: Taiwan Semi, Nvidia, and Alphabet.
Yeah, Taiwan Semi, Terry, I'm looking at 374. I think it went up to 400 today. It was at 460 when it topped out. This is the backbone of the entire AI trade. We still got positive estimate revisions for 27 and 28. We got a 23 PE, forward PE. I'd still be a trading system guy to buy the dip on Taiwan Semi, but I would not be an investor at Taiwan Semi at these levels. I think it's a trading stock, and of course, our momentum score is A, which echoes that sentiment, Terry.
Nvidia.
NVIDIA, of course, we got to talk about NVIDIA because NVIDIA is this story of this whole boom. And NVIDIA is trading at 190. It's off its 220 high, so we're already at a 10% move. But again, estimate revisions for this year and next year are going up. And we got a price earnings ratio of 21. And very hard not to consider NVIDIA and Taiwan Semis as kind of the tentpole names in the AI space. Again, Terry, I'm probably more of a trader than an investor in this name, but if you're looking to pick up the big swings in stocks, you've got a 2.2 beta name here with NVIDIA, and you can just day trade the NVIDIA or run it for a couple of weeks off these lows every once in a while. And NVIDIA is certainly something that will do that for you.
And Alphabet.
Alphabet, Terry, of course, this is the consumer name out there that is supposed to spread the AI trade out of the enterprise systems into the consumer name. Of course, Gemini is doing this. Anybody who has a Google Chrome will get the Ask Gemini tab at the top now. I would just point out, if you ask Gemini, you don't get any ads and you get just affirmation. And so it can be quite negative for Alphabet. They invested all this money because there's no return on investment downstream for them. They do have enterprise businesses, so Google Cloud will benefit. But if it benefits not enough and they start to cannibalize their search business, it could be very troubling. And of course, now we're back to 335 in the stock from 400. And there's already concerns that in the marketplace that indeed is happening.
Our chief equity strategist and economist, John Blank, on the current U.S. macro setup. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.